One of the favorite questions to ask a fund manager is how many stock has he bought in the last 5 years and how many of them does he continue to hold even today? This is a great question because it cuts across a lot of other topics like turnover, buy sell discipline, portfolio sizing, and etc. In this video, I try to explain why buy and hold as a strategy is overrated, and I thank Microcap Investing for the content of this video. Portfolio turnover is a topic of interest to many, and as per Investopedia, it is a measure of how frequently the assets of a fund are bought and sold by the fund manager. It is usually measured in 12-month period. The high portfolio turnover essentially means that the fund manager is very active in the positions he is not holding, and therefore you as an investor now may think, is the fund manager trading or investing? Is an equity investing supposed to be buy and hold strategy? Didn't he do enough due diligence that he couldn't even hold it for one full year? There is an over glorification of buy and hold strategy with the advent of private equity funds, venture capital, and interest rates being so low. Everybody is trying to participate in the primary market with the sole mantra of permanent capital. The lower the portfolio turnover is, the more cerebral and thoughtful the fund manager is perceived to be, and in many cases, it is used as a badge of honor. Many shareholders take a lot of joy and pride in being loyal shareholders, but in reality, all that matters is performance. Do you know the greatest fund managers like Peter Lynch had a portfolio turnover of 300%? So is the case with Joel Greenblatt at Gotham Capital. Even our very own Warren Buffett had 50% to 100% portfolio turnover during first 3 decades of investing. In fact, contrary to what most investors believe, these great fund managers had the best performance when they had high portfolio turnover. And believe me, they dealt with far more established large firms where lower portfolio turnover was always possible. One of the key things that made them great is that they could identify when they went wrong quickly. Successful investing is not just about picking winners, it is also about picking out losers from the portfolio. Therefore, when you are in a public market, you have the option of selling, but you need to know when to sell. We sell when there is overvaluation, we sell when there is a better opportunity, and we sell when the story turns out to be worse. Investing evolves in its own ways, and not all of them are good ways. Therefore, you can't say that I'm going to buy this particular thing for 1 year, 5 years, 10 years. You will buy and hold till the time management executes. Therefore, I believe that at best, companies are to be rented. Ownership is earned. Therefore, buy and hold is forever if the management executes forever. Investment managers and asset allocators aren't going to be right all the time. What we acknowledge is that we are ready to agree to a certain degree of uncertainty for the sake of speed and getting in early. An opportunity is an opportunity because the conditions aren't perfect yet. Therefore, when we find an idea that we align our interests to, we prefer speed to certainty. Our initial due diligence will get us into the position, but it is our maintenance due diligence that will make sure that we stay invested and or save us from big losses. Our future returns are going to be dependent on our ability to course correct and adapt to new informations. There is going to be turnover because turnover is the price of progress. And therefore, when you sell, sometimes you sell during profit years and sometimes you will have losses. A big part of being a successful investor is your ability to accept when you go wrong and not let it crush your confidence and slow you down. At Augment Capital Advisors, we use the risk per return framework to assess valuations of various segments and decide if we should buy, hold, or exit. I'm sure by now you understood that buy and hold as a strategy may not be the right strategy all the time. And I really thank you for watching this video. You have a great day.